question is, does the Fed actually stay the course? And for me, unfortunately, I'm doubtful. I think right now it's easy, right? You have low unemployment, you have good jobs numbers for the most part. So it's easy to say, yeah, we're going to stay the course. Show me an economy where you have 6% unemployment, right, and people are really struggling even more so, and then tell me that the Fed isn't going to come off the sidelines. And I agree with you. If that would be the worst case. I know people want it, but one of the things that I always try to input into people is that cycles are natural courses, right? Bull markets, bear markets, business cycles, those are naturally occurring. And if you don't screw with them, I'm a big believer that it's much more like a rolling hill, right?
Gareth's perspective on the market is intriguing. He suggests that investors may have mispriced the market and highlights the possibility of the market anticipating a pause in the Federal Reserve's interest rate approach. However, he emphasizes that such a pause does not necessarily indicate an imminent rate cut. This cautious viewpoint reflects his bearish stance on the equity markets, as he believes that inflation will remain high in the foreseeable future. Gareth also asserts that the Federal Reserve will only lower interest rates if inflation significantly decreases. These factors contribute to his prediction of a near-term outlook of stagflation. Notably, Soloway accurately predicted the Bitcoin bottom in 2021, drawing upon his 2 decades of professional trading experience that has earned him respect in the industry. He also mentions that historically, Bitcoin's value has declined alongside the stock market during economic downturns. Consequently, if the S&P experiences substantial losses, Bitcoin is likely to be affected by the selling pressure. Despite his near-term bearish stance, Soloway remains a long-term Bitcoin bull. He anticipates that Bitcoin's value may initially drop due to the ongoing banking crisis and potential stock market sell-off, but will eventually recover and continue its long-term growth trajectory. In this video, Gareth Soloway revisits the dot-com crash and draws a comparison with the meme coin craze, noting that history often repeats itself as people increase their greed tolerance and seek bigger gains, such as the next 100x. He also shares his thoughts on Bitcoin and Ethereum, discussing their potential as digital gold and silver.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
A couple things in terms of real world, like being in it. So the same things in terms of what happened in 2021 and even what happened over the last few months with the meme coin, shitcoin kind of situation where you had these people that were they were bringing to market anything. I mean, it could have been like, hey, we drop ship widgets. It like literally meant nothing, but they would name their company widget.com, right? Pets.com, like all these .coms, and instantaneously they would shoot up hundreds of percentage. They would 10x, 15x, 20x. You'd have these pump and dump schemes, which again, unfortunately, crypto Twitter and some of these other things, that's happened as well, where you had these people that would go on these message boards. Back then, by the way, the internet was in its infancy, but you still had these like Yahoo message boards where people would go on and pump and say, oh, this is going to be the next greatest thing. It was kind of the influencer type group of the early ages of the internet. And so you had the same mentality coming into it, which again, if you notice in these crazy periods in other assets, you'll have the same sort of thing. People repeat, right? Leopards don't change their stripes, as they say. And so you have the same sort of impact, the same sort of bad behavior, if you will, that goes on. And by the way, you could go back to the 1980s with you look at the Jordan Belforts and stuff like that, with the pumping of the penny stocks and stuff like that. I mean, it happens every so often because greed and fear never change. So right. The greed of people will make them want to believe that whatever it is, even if they know deep down it has no value, they still believe that they can 10x their money and then sell it to someone else at a higher level. And that in and of itself was what raised flags for me, is just being like, holy cow, I'm having like PTSD flashback from the 1999, 2000 level. This is exactly what people were doing, and look at how it came out. And so I think for me, that was like the real recognition of something's wrong here. When you have things that are being shilled that do not have any intrinsic value or use case even, that's a warning sign. So again, the data you're talking about, I think, is really important, Ben, as well as looking at the actual data as well. You had a lot of this kind of going on. It was kind of like the precursor to the big one, if you will, which occurred in 2021 and all the way up into recent times. And I think the difference maker is that once we hit 2020, there was this flood of liquidity, right? You had so many situations where people were locked down, so they weren't driving, so they weren't spending money on gas, they weren't going out to eat, they weren't spending on money for food. The Fed, the government, the U.S. government was sending people checks if you made less than X amount of money, and so people, a lot of people were just sitting behind their computer, looking and seeing what was going on, and they have more and more money that they had in terms of liquidity. And we know the Fed was flooding the banking system with liquidity. And so it kind of created this almost tidal wave of, hey, I've got lots of money, I can't do anything with it, let me figure it out. Oh, this is like, it's almost a gambler's mentality. Oh, this looks like something I can do. And all of a sudden you hear about stories about Dogecoin and someone making $5 million on Dogecoin. And it's very much like the mentality of the lottery, right? Deep down, we know I play the lottery when it's like above $500 million, right? That's like my key thing. And deep down, I know I'm not going to win, but it's just fun. It's exciting. And so you get these people to kind of have this mentality of saying, hey, listen, if this person can do it, maybe I can win that lottery and 10x, 100x my money. And I think that lured a lot of people in. And then now the Fed, I mean, that's the bottom line. The Fed is sucking out all this liquidity. And that makes it very, very tricky for it makes it tricky for scams to exist when you suck out liquidity, right? Think about Bernie Madoff, right? Bernie Madoff, as long as things were going great, he could pay off investors that wanted to pull out with more money that he was taking in. But as soon as we saw the 2008, 2009 collapse and people freaked out and he wasn't getting money in the door, that's when these scams are exposed. And I think that's so important for people to understand.
The Bitcoin market has witnessed substantial growth in both value and adoption year to date, primarily driven by high inflation in global markets. Despite the rising interest rates intended to curb inflation, investors are increasingly confident in investing in Bitcoin through self-custody. Additionally, the upcoming fourth halving, which historically triggers a crypto bull market, is less than a year away. Gareth's perspective on Bitcoin is equally fascinating. He explains that although there may be short-term positive impacts in the event of a default, the role of Bitcoin is still not well defined. Therefore, he believes that Bitcoin's bottom has yet to be reached and even speculates a potential drop to as low as $9,000 by 2024. Gareth also discusses the resilience of Ether amidst regulatory crackdowns by the SEC. Now, let's return to the video.
For me, at least, specifically with Ethereum, I think the number one thing why it's held up a little bit better is probably, I don't believe it was named as a security in that group of lists that the SEC said. So I think that gives people confidence. And one of the things I like in Bitcoin too is like Bitcoin is like your digital gold, and Ethereum is kind of like your digital silver, right? And the reason I say digital silver is, number one, it's usually more volatile. Silver is more volatile than gold, and also number two, you have this kind of industrial use case for silver, right? It's a store of safety, but it also is used in the economy. Well, Ethereum, you could argue kind of the same thing. People believe it's kind of a safety hedge, but they also need it. You use it for various transactions and different things as well, like that. So I think that's one of the keys for me, is that you have digital gold and silver, and so expect it to be more volatile. But in looking at the chart, I just want to show my chart real quick on Ethereum, and then we'll get right into kind of what you were saying, is that in terms of the Ethereum versus Bitcoin. But what we can see is, look at this beautiful like parallel lines, and how in terms of charting, and by the way, this is just more proof that you don't know why these things work out. I certainly don't, but there's some sort of subconscious in traders and investors and people's minds that tries to make sense out of chaos, right? So most of the people would look at this, oh, this is a wild chart, but look at how many parallels exist within this chart. Like the high, this is parallel to these points, which then are this parallel to these points, and vice versa all the way down here. And we can see that we did break down short term. So I do expect Ethereum to come in here towards this 1635 level. But now that then becomes the support level, the next level, right? You have the lowest point here going back to 2022, connected through these lows right through here. And that now becomes your technical support. So if we do sell off there as a technician, I would start saying, okay, if we're going to bounce, this is going to be the spot where we're going to get a bounce. Doesn't mean Ethereum's bottoming by any stretch, but that would just be a technical short-term level of support. Now, if we just quickly go to Ethereum, Bitcoin, let's take a look at that in terms of Bitcoin. A couple things, and again, this is just based on purely charting, and I'm just going to do this live as we take a look. But this would be something that I would be watching like a hawk, right? So there's a trend line here that you're hovering on. If this breaks, you then probably have downside into this level down here. And so just like we said, this was consolidating, kept on hitting resistance, finally in the process of breaking out right here on the Bitcoin dominance chart. Now, in all fairness, there's not a lot of resistance on the way up now. I mean, you're getting to a point where there's a big move coming in this Bitcoin dominance. And the first thing I see, and I'll put a trend line in, see all these kind of pivot points right in here, right across here, this low right in there. And you're right about that. Look at this. Look at how you kind of can draw a line right across here. And what's even more amazing in this, if you take the highs of Bitcoin dominance from 2017 and you connect it to the highest point in 2021, look at the convergence of those two trend lines. And this, again, I love how your data is confirmed by my data and it's vice versa, because it really, I think that's very powerful when you see a confluence of these type of things. And so I'm right around that 59-60% level in terms of Bitcoin dominance. Absolutely.
BOCI, the investment arm of the Bank of China, has made history by issuing tokenized notes in Hong Kong. This marks the first time a financial institution in China has issued a digital note in the region. In collaboration with UBS, BOCI tokenized the notes on the Ethereum blockchain. The issued notes amount to 200 million Chinese yuan, approximately $28 million. This partnership aims to simplify digital asset markets and products for customers in the Asia-Pacific region, specifically through the development of blockchain-based digital structured products. Ing Wang, deputy CEO at BOCI, expressed optimism about the digital economy's evolution in Hong Kong and the commitment to its financial industry's digital transformation and innovative development. Hong Kong is striving to become a crypto hub, with Financial Secretary Paul Chan Mopa emphasizing the region's embrace of regulation. The lifting of the crypto retail trading ban and the encouragement for crypto exchanges to obtain licenses demonstrate this direction. The Securities and Futures Commission has established exchange guidelines, and exchanges such as Huobi, OKX, and BitMEX have expressed intentions to apply for a Hong Kong license. Despite some societal doubts caused by market fluctuations and the closure of certain virtual asset exchanges, Chan believes that it is the right time to push forward with Web3, as innovations continue to pour into the cryptocurrency sector. Cryptocurrency enthusiasts are eagerly anticipating the next breakthrough, akin to the significance of Bitcoin, as the holy grail for the industry. For more daily dose crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.